Welcome to ECN Trade Daily Video. Before we begin, it should be noted that any advice is of a general nature only and that your personal circumstances have not been taken into consideration.
Hello everyone, my name is Rob Clayton and thank you very much for joining me. The Australian dollar overnight swung in and out of slight gains and losses. However, the new week has clearly shown the market struggling to recover since the spike up towards 70.80 late last week. What triggered the rally though was market read from New York Fed President John Williams, a slight dove in terms of that he stated the bankers that is, need to act quickly in face of slowing economic growth, which implied possibly a rate cut. However, Williams backtracked most of his comments and said they were not intended to imply specific policy moves at the next FOMC meeting. Looking ahead, the blackout period for the Federal Reserve officials begin with no more clues as to whether the central bank will cut rates at the meeting at the end of the month. It is 25% factored in that the market will move, with only a slight possibility of a 50 rate cut. Nevertheless, from my view, I don't think the market should go. We've got great non-farm paid numbers, inflation is relatively okay, and also retail sales coming very strong at 0.4%. Nevertheless, looking at the technicals for the Australian dollar, as the target remains towards 69.80, and I do expect to see the market fall back to re-challenge last week's low, around 69 cents. Resistance seen at 70, 60 to 85, and stop above at 90. The euro is weakening and now slipping under 112 gives more view on the fact that we could get the challenge to 111.80.90. It is assessed a break beneath there would give further scope to the downside and bringing the target around 110 as a possibility. Any advances sees a range of around 112.45 to 112.65 as an intraday cap, with firmer resistance seen at 95. Well, the euro dollar yen has found a little bit of momentum since rebounding off the base of 107.15.25 is that the market's now looking towards a level of 108.45.55. Beyond there and up towards 109, I see this as an opportunity to shorten the market. I'm not overly bullish on the move, and I do expect to see this attempt to the upside turn around. The clock is ticking in the UK for the new Prime Minister. Odds on, Boris Johnson has a firm footing to beat Jeremy Hunt in the race to replace Theresa May. Overnight, the UK Foreign Minister Sir Alan Duncan resigned in protest of the possibility of Johnson becoming Prime Minister. It is assessed that a hard landing could still come in favour of the pullout between the UK and the EU, and with the downtrend holding here for the technical reasons, sees a cap around 125.50.70. A break of 124.65, which is now on the door, could see a move to 123.50, which is in favour. Beneath there could even give a scope to 121. Let's see how the market plays out. It is bearish. Let's see if the bears keep the pressure on. Technically, gold is breaking down, and I do expect to see the at least towards 1,395 to 1,415 and reassess from there. From an indication from the technicals, they are married up and therefore could give further scope to the downside challenge. Oil still mixed and still uncertain to what the outcome will be after Iran seized a UK ship in the Persian Gulf last week. The tension over there is still very high, but the technicals are still somewhat mixed. I'd rather leave any view to this outlook in the short term and keep an eye on the doji here. We've got 3 engulfed. This is bullish. If we close with another doji on the downside, then I am looking back towards $58 as a target and a base of 54. So I'm waiting for confirmation now. Well, that wraps up for today. Thank you very much for joining me. And as always, look out for the intraday report. I hope you enjoy the great start to the new day.